This week the stock markets will take some from the economic data to be announced. The Fed's preferred inflation indicator and the August jobs report both do. At the Jackson Hole meeting last week, Chairman Jerome Powell's hawkish tone continued. He indicated that there won't be much wiggle room in the fight to drive inflation down towards the 2% level. Core inflation still remains stubbornly high, and the 2% inflation target could be elusive. The employment data on September 1 will be the final such publication before the central bank's meeting on September 20. Treasury rates are rising, and futures trade is pricing in a 66% chance that the Fed will raise its benchmark interest rate. If done, it would be by 25 basis points in November, following a halt in September. In evaluating whether to invest in stocks, part of the calculation must be that higher interest rates are here to stay. While there is the focus on the short end of the real action will be in the long end of the U.S. yield curve. Despite the recent move up in yields, at the long end the yield curve remains inverted. This is changing. I would put this mid-term to equity investors. Over the next 2 years the U.S. yield curve will normalize. It is highly likely that yields at the short end will be lower sometime over the next 2 years. But the action will be at the long end of the yield curve. Yields could increase by 150 basis points to 200 basis points. The issue is for equity investors that the long end, or risk-free rate, is the basis for the calculation of the equity market risk premium. If yields at the long end top 6.0%, the hurdle rate of return could be 8.0%. Stock returns, plus dividends. The S&P 500 index, SPY, closed up plus 0.69%, and the Nasdaq 100 index, QQQ, closed up plus 1.65%. The Nasdaq was boosted by the blowout earnings from Nvidia and the impact on other semiconductor firms and the technology sector. In addition, cybersecurity stocks surged after Palo Alto Networks predicted higher than expected full-year billings. Meanwhile, important earnings reports are scheduled. Salesforce, NYSE, CRM, Analysis, Broadcom, AVGO, Preview, and Lululemon, Lulu, Preview, will all announce. Other issues to keep an eye on are the FDIC's planned new limits on small business lending. The Biden administration's disclosure of the first 10 pharmaceutical drugs picked for Medicare price negotiations. China will remain an issue for the stock markets on economic concerns. Chinese banks slashed prime loan rates less than expected. In consultation with state-owned commercial banks, the People's Bank of China, PBOC, lowered the prime rate for loans. Terms of a one-year loan falling by 10 basis points. The rate came down to 3.45%. This reduction was less than the 15 basis point fall to 3.40% that was anticipated. The prime rate for a 5-year loan has remained unchanged at 4.20%. This was despite forecasts calling for a reduction of 15 basis points. This would have brought the rate down to 4.05%. China's Shanghai Composite Stock Index to a near 8-month low. Representatives of national and international monetary agencies convened over the weekend in Jackson Hole, Wyoming. While the chair of the Federal Reserve in the United States, he stated that the central bank is prepared to hike rates further if warranted. The president of the European Central Bank, Christine Lagarde, has stated that borrowing costs will be set as high as necessary. Then they will remain there until inflation returns to target levels. The 2-year Treasury rates, which are the most sensitive to assumptions for future policy. Rates reached their highest level in 7 weeks after the remarks were made. The markets are discounting a +25 BP rate rise at the September 20 FOMC meeting at 12%. Then a +25 BP rate hike at the November 1 FOMC meeting at 45%. The Euro Stoxx 50 closed up +0.28%. China's Shanghai Composite Index closed down -1.24%. Japan's Nikkei Stock Index closed up +0.37%. All the graphs in this video are by BARCHART. If you are thinking of subscribing to BARCHART, my affiliate link is in the comments. Also included are my affiliate links to the online brokers, eToro, First Trade, and FX Primus. These videos give a quick overview of the US stock markets with a couple of stock ideas. Issued on Mondays, Wednesdays and Fridays based on the underlying blog. Visit my blog site www.smartestdata.blog. If you like these videos, hit like and subscribe, it really does help the channel. See you in the next video.